Hello friends, welcome to the weekly update series where we present the news from financial sector which matters to you. My name is Raghu, a certified financial planner by qualification and founder of FinSim. Let's start with the news relating to the economy. Finance Ministry and RBI had projected a GDP growth rate of 6.5% for FY 2024. Last week, Finance Ministry highlighted three primary issues which might play a spoilsport in India achieving this growth estimate. 1. El Nino. El Nino condition may lead to drought conditions resulting in lower agricultural yield which will ultimately push the prices up, impacting inflation. There is higher probability of El Nino effect this year which might impact our monsoon season. In April, OPEC, nothing but Organization of the Petroleum Exporting Countries, announced a surprise cut in the oil output which resulted in a small rally in crude oil prices. If they were to surprise us again in the future, it might result in a raise in oil prices and it will have a negative impact on India as 85% of our crude oil needs is met from imports. Thanks to RBI's regulatory actions, balance sheets of Indian banks have strengthened to a very great extent. However, any further banking failure in US or Europe will have a negative impact on our economy as well. Last week, Swiss regulator highlighted that the recovery and resolution plans of two Switzerland's 5 important banks isn't sufficient. We are still not out of the woods and banks across the world will have to work to strengthen their balance sheet. CapEx is nothing but the capital expenditure to create long-term assets. During the FY24 budget, Finance Minister had announced a 33% increase in capital expenditure. That's a record of almost 10 trillion rupees for infrastructure development. Earlier during the week, Finance Secretary in an interview mentioned that the entire money allocated for CapEx will be spent this year. This is a positive news for the whole economy as infrastructure is the backbone for any developing country. On the personal finance front, we are fast approaching the deadline of 3rd May 2023 for choosing higher EPS. EPS helps in providing pension to its subscribers after retirement. At present, employers' contribution to EPS is capped at maximum of basic salary of 15,000 rupees, which results in a maximum contribution of 1,250 rupees towards EPS. If employees were to select higher EPS contribution, then action needs to be taken before May 3rd on the EPFO UAN portal at the earliest. If employees were to choose higher EPS, then there will be few changes in the contribution. First one being, if employee's salary for PF calculation is above 15,000 rupees, additional 1.16% will be deducted over and above 15,000, which will be contributed to EPS from employee. Out of employer's contribution of 12%, 8.33% will be diverted to EPS and residual 3.67% will be contributed towards PF. Third, from the accumulated balance in EPF, back calculation will be done and corresponding amount will be deducted from EPF balance and credited to EPS. This will have a negative consequence on the compounding effect of EPFO balance. Many subscribers of EPFO are struggling to access their passbook from the EPFO site due to some server issues. As an alternative, subscribers can download the Umang app and access their EPFO passbook from it. This is a workaround till the EPFO technical issues are fixed. Let's now look at how the financial markets performed over the last 1 week. All major indices in India posted a positive growth on a week-on-week basis. Nifty 50 was up by 2.5%, Nifty Mid Cap Index up by 2.02% and Nifty Small Cap managed to beat both large and mid cap and was up by 2.88%. From a sectoral perspective, real estate was a clear winner with an up move of 5.08%. IT, which managed to recover 3.3% after a fall of around 5% during the week of 21st of April. Gold and Brent crude oil was down by 1.29% and 1.31%. INR to USD depreciated by 0.41%. With respect to global markets, it was a mixed set. Major US indices S&P 500 and Nasdaq were up by 0.86 and 1.28% respectively. FTSE was down by 0.56%, whereas DAX was up by 0.7%. Emerging market index was flat. On the products front, we had an IPO of Mankind Pharma last week. This is the fourth largest pharmaceutical company in terms of domestic sales. This was oversubscribed by 15 times. One point which we need to note here is that this is an offer for sale, popularly known as OFS. In OFS, promoters try to sell their shares and no proceeds from OFS will go to the company for business expansion purpose. Promoters are the one who knows most about the business and its future growth. When promoters are selling their stake, it raises the question of whether the retail investors should actually invest in such companies. We can only take this call after studying the business prospectus in detail. In the second half of 2019, equity market was literally shaken by a scam pulled off by Karvy Stockbroking Limited, wherein the brokerage house managed to pledge the securities lying in the demat account of its customers to raise funds from banks and NBFCs. This resulted in deep and structural investor reforms by SEBI to ensure these kind of instances aren't repeated in future to safeguard the interest of investors. Finally, SEBI has delivered the final verdict directing two of Karvy's subsidiaries to return the amount to the tune of 1,443 crores within 3 months, and if they were to fail to do so, NSE has been directed to take control of assets of these two companies. SEBI has also penalized KSBL and its MD to the tune of 13 and 8 crores respectively and barred them from accessing the securities market for a period of 7. Hopefully, this will ensure the banks and customers of KSBL are reimbursed. But what happens to the opportunity cost lost? It's important for clients to keep a tab on their investments on a regular basis. If you like this video, please do not forget to subscribe to our channel, like the video, click on the bell icon, and also share this video with your friends and family. You can always reach out to us on the mobile number and email ID listed on the screen for a free 15 minutes consultation without any obligation, and we would be more than happy to assist you on your queries.